Alright traders, I'm back again with another video. Just want to take time to show you how I trade previous week high and low along with previous month high and lows. Okay, you could also do this on different time frames, and I'll talk about that in a little bit. But basically what I'm doing here, I made a video previous to this. It was the same thing, but I was using the Ichimoku system, and I was using these levels as support and resistance levels. Levels where I used as support and resistance are entry levels. Well, now I took the Ichimoku off of there, and I'm using this shaded area. This shaded area is going to be my weekly high and low area. Okay, so here's the weekly high, here's the weekly low. I still have the monthly high and low on here, which is this blue line, this monthly high and the monthly low here. Now, I like this shaded in area because you can see, it helps you, visualization helps you a lot better. So I see that, and I know when to really get into the trade. Okay, so this is just trading this way, right, without anything else. I have this blue line here, which is your 100 bar moving average. It tells me the market sentiment, bearish or bullish. If price is up above it, it's pretty much bullish. If price is below, it's bearish. Also, the angle and direction of the 100 bar moving average. The steeper the angle, the more of a trend you're in. And if it's pointing up, it's upwards. The market is bullish. And if it's pointing down, the market is bearish. Okay, so those are indications that tell you which way you want to be trading, if you want to be going long or short. Now, the way I do this is, you see right here, price broke this previous week high. When price broke this previous week high, I get into the trade. Now, normally I would like to put my stop loss on this previous week low. Okay, but when you're using a weekly time frame, it's a little big, so it's way too big for me. So what I look for is the most previous pullback is right here, and you can see where this level is respected. This little pullback here is also in line with this little consolidated area right here where the market stalled right here. So I put my stop loss below that, and what the market does is goes up and pulls back to this previous week high. It doesn't even break that level, and then it goes off again. Now, if you didn't get into the trade, then you have another opportunity, because you see right here, this previous week high, the market breaks that previous week high again. Now, here's where you would put your stop loss, where this latest pullback was, and price never even attempted to break that. Okay, the market kept on going up. It even broke through this previous month high. This would have been a level if you got into the market here. Usually I look at that level and I say, well, I want to wait till it breaks that level. So I wouldn't have gotten into the trade. I would have waited till it broke here, and then the market went up a little and pulled back, and it pulled back right to that level. Okay, and then the market took off and does the same thing, and it takes off, and it's been going. Now, a thing that you can look at is, you could see here the previous week high. You could see it's making like steps. Previous week high, up and up and up. What you're going to look for now to see that the market is getting weak is, once them previous week highs make a stepward down, then you might have a change in market sentiment. Your directional change may be changing. So you got to step up, previous week high, step up, previous week high, step up, previous week high. Same thing, same thing. Now, next time, if you got a week low down here, previous week high right here, and then maybe you have another one a little lower, and then you know that the market may be starting to change. Now, you look at this and you say, well, you don't have this indicator, but you can also do this using your pivot point indicator, and most charting packages come with a pivot point indicator. What you're going to do is, you can see right here, same chart. Here's the previous week high, previous week low. Now it's making this previous week high. This will be the previous week low. And then here's my monthly high, my monthly low. Same chart. Again, without the shaded area, previous week high, previous week low. You can make this yourself if you want to draw this line right here. Here's your previous week low, and here's your previous week high. And then here's my monthly high and my monthly low, just like it was on the other chart, but no shaded in area. So the way you'll find that is, you use your pivot points, you put it on fibs retracement, you use today, and you'll use the you want it to calculate today's chart candle, and then you'll use only the S3 and R3 levels. Okay, So you'll set those to weekly. This is what these are on, weekly. You can change that to daily, it'll be different. And then you can change it to, this is the monthly, so you can change it to monthly. You could have one for weekly, and you could do it, I think you could do it like hourly. So if you want to trade like that, if you're in an hour time frame, maybe you use the daily. Okay, so you're trading on an hourly time frame, and you'll use the daily high and low. Okay, but let's get back to this again. But like I was showing you here, how the market steps up, how you can see these previous week highs stepping up. That's a good indication that, you know, the market's trending up strong. Now you could see the market when it really took off, it never even looked like it ever came back to come close to touching these previous week lows. As you see, it never even came near there. Okay, so let's go to another chart. We'll go to the USD. Let's go to the US dollar and the well, we're up. You'll do the Aussie yen right here. It's almost the same as the previous chart. You can see the 100 bar moving average. You can see how strong it's going. You can see how the previous high stepped up, stepped up, stepped up. Now the thing that you'll notice here, we never even came close to touching this previous week low, but then we broke this previous week low. Okay, so this lets me know that the market may be changing the sentiment here. So what I'll look now is, maybe this will be the highest that it's going to go, this previous week high. I'll look at that as a point where that the market may not go any higher for a while. Now what I can probably look to see is that the market will get into a range and make that box motion that I showed you before, and it'll get into a ranging motion, and then eventually it'll break that low and go down, start trending downwards. Okay, so that's what you can see where the market's gotten weaker, because it broke this previous week low. All this time it never did, all these weeks, boom boom boom. But here you go, here it broke that, and then it came back up to this previous month high, and it bounced off of that. Now we'll see what it does here. Maybe it won't break that level, and then it'll go down. Okay, still trading these, you see the same thing. You break this level right here. We want to be going long because we're above the 100 bar moving average. So you eliminate one thing, going short. So you know you want to go long, so you're going to be on the right side of the trade at least. I don't know why you would want to go short. Everything's telling you to go long, but when you do this historically, it's easy to say that. Okay, it's easy to say do this or do that, but this is what I really do. So I'm trying to show you right now, and I'm going to try to show you on a live video when I make a live trade. Now the market breaks this level, well, your stop loss is going to be here on your previous pullback. Okay, so here's your stop loss. Market breaks that level. Okay, there's no reason for you to be thinking going short anywhere here. Okay, so we're going to be going long. We break this level, we put our stop loss here, market moves up, comes back to this level just about, and then it comes back to that level again. It came back to that level 1, 2, 3 times. Okay, so you got to be patient if you're trading on a 4-hour time frame like I am. So I know what I see this a lot of times with the market. I'm patient. I wait for it to do what I want. So if I got into the trade here and I made this, you know, I could take it, but if I waited and saw it pull back to here, I don't get real frightened. I like to do things that I see the market always doing. I see that it's respecting this level right here, this with this monthly high. So it's using it as support, and it's not breaking that level. Okay, it bounces off of that level again, and then it takes off. So if you got in right here and you stayed in, and then you let the market go, now you made some nice profit. Okay, most people won't ride this far. Maybe they'll get in here. If they got in here, they'll take this, and then if they got in here, they may take this, and that's it. If they got in here, they'll take this because they see this pullback. But the market's going to always pull back, and then it's going to go. You have to learn to use your Fibonacci retracement levels to see where it might pull back to, and also look for the previous pullback, the latest pullback level. Now you see this right here. This is a high level right here where the market pulled up to and came back. Now I'll use this as support, because see, now when the market comes down, you look for it to not really break that level, and it breaks that level a little bit, but it pulls back to that level and then it goes. Okay, so you have to have patience and you have to wait some trades out, but that's the way I look at the market. I've been seeing it all the time, the same thing over and over, and the market has a memory, and it does a lot of the same things that you see all the time. Once you get used to looking at these charts, you'll see these things over and over. I'm looking for this box because I always see the market go up like this and then make this box where it gets into a ranging motion, then it breaks this level and goes low. Sometime it will break above and go higher, but I know I'm looking for it to range here now. Okay, you see the weakness where it broke down through this level here. So those are some things that you look at and look for. Let's go to another chart. Now you can see here the market broke through this level, and then if you got in the trade, maybe you got in right here, you really didn't get much in, you might have got stopped out. Okay, and if you got stopped out, then you see the market break here, you get in again. But what you're looking at here is, you see how straight this 100-bar moving average is? That means the market is ranging. If you got a straight 100-bar moving average, it's going to be hard to really judge what's going on with the market, because it's going to be in a ranging motion. And you can trade these highs and lows in a range, playing off of the high and the low. So you get in on the low, go long. You get in on the high, go short. But I'm not gonna get into that right now. But you see this 100-bar moving average was flat, so the market was in a ranging motion. Then finally it started to turn over, and then the market started to break. It broke this previous week low. You want to get into the trade here. Okay, you also see this monthly low right here. So you got a previous week low here and a monthly low here. Some strong confluence. When you see them two together and the market breaks that, you would think that maybe, okay, it's going to respect that level, but it didn't, and it broke that level. So that's a strong level for you to look at. It breaks that level and then it goes down, retraces a little, goes back down, and then it retraces all the way back up to that level, and then it goes down, and it's continuing to go down, and you can see the steepness of this 100-bar moving average. Okay, so that's something you look at there. And we'll go to one more chart, New Zealand dollar yen. This is doing the same thing as the other charts. Okay, you can see the steepness of the 100-bar moving average. You can see price never even came back to this previous week low, but then finally here it broke loose and came through here. I would have gotten to this trade here, and I would have wrote it down to here. Now the market pulls back, and yeah, I would have taken my money here, because basically what I look at, this is the first time that it broke this previous week low and the 100-bar moving average. Usually it doesn't break that level and keep on going and going. Usually it'll come back and then it'll start to get into that rangy motion. Like I said before, it'll make that box up here. So look for this to be the high for a while, and then it'll make a low, stay in this low level. But what it's doing, you can see it stepping, and now look at this previous week right here. The previous week high is starting to come down. So now we walked up, now we're going to start walking down maybe. So the market sentiment is changing. Okay, and you look at these levels. When the price broke this level, you get into this trade, you put your stop loss down here. If you got in right here, we're using this area right here. The market goes up, it breaks this level, you put a stop loss right here, the market retraced. You can't get scared and get out. Keep your stop loss, let your stop loss work for you, because your stop loss right here is in a good area. Okay, so the market comes down, it breaks that level and goes. Now what the market does, come back and retraces to this previous week high, uses that now as support. Here it's resistance, breaks through, now here it's support. Okay, and then the market goes and goes. Now like I said, when it's getting weak here, usually it doesn't break here and just continue to go down. Usually it doesn't, but it does sometime. But a lot of times it makes a break, comes back, may make another break, and then hang around there for a while, and then it'll go. Okay, so those are things to look for. But traders, that's all I got for now. So I'm going to close out. Hopefully I'm helping someone. If you need some help, let me know. And until next time, God bless.